For many Nigerians looking for foreign exchange, the first point of call has been the bureau de change. Those needs vary from school fees, medical expenses to business travel and holiday. This is because of the often difficult procedures for obtaining foreign exchange at the commercial banks. Although the rates at the BDCs are slightly higher than the official rates, they still remain the first choice. But now, that avenue has been closed. The Central Bank of Nigeria is accusing the BDCs of having been complicit in illegal forex transactions that have hindered the flow of foreign exchange into the country. Weekly sales of foreign exchange by the CBN will henceforth go directly to commercial banks, which have been mandated to sell to Nigerians.
The CBN sells $20,000 to over 5,500 BDCs per week. This amount translates to about $110 million per week and about $5.72 billion per year. This is a scarce resource, and Nigeria's central bank, the Nigerian government, cannot continue to allow this unwholesome practice to continue in Nigeria. This is a huge hemorrhage on our scarce foreign exchange reserves and cannot continue, especially because we are also concerned that bureau de change have become a conduit for illicit financial flows. Indeed, the facts abound that BDCs have turned themselves into agents that facilitate graft and corrupt activities of people who seek to conduct illicit funds flow and money laundering in Nigeria. The central bank will henceforth discontinue the sale of foreign exchange to bureau de change operators. B. The bank will no longer process or issue new licenses for BDC operations in the country. This stoppage extends to all licenses being currently processed, regardless of the stage of that processing. C. The bank would henceforth channel a significant portion of weekly allocations currently meant for BDCs to commercial banks to meet legitimate FX demand for ordinary Nigerians and businesses.
The CBN governor also announced the committee's decision to retain the monetary policy rate MPR at 11.5%, the applicable rate since September 2020. This is in line with the recommendation of the International Monetary Fund.
The MPC made the decision to hold all parameters constant, believing that a hold stance will enable the continued permeation of current policy measures in supporting the recorded growth recovery and macroeconomic stability. The committee thus decided by a unanimous vote to retain the monetary policy rate at 11.5%. In summary, MPC voted to 1. Retain MPR at 11.5%, 2. Retain asymmetric corridor at plus 100 and minus 700 basis points around the MPR, 3. Retain the CRR at 27.5%, and 4. Retain the liquidity ratio at 30%.
The Nigerian economy continues to record growth despite the shortfalls from the COVID-19 pandemic, especially in the non-oil sector of the economy. Decisions like this, according to experts, will go a long way to increase investors' confidence in the country. It is also expected to drive down inflation. Amaka Uday, Arise News.